Well, good morning. It's May 13th. I want to bring you the latest data here in the Austin metro area. We're going to start with some statistics. We will take a look at inventory and mortgage rates and stick around. I'm also going to share with you an article that outlines 6 of the hotter zip codes for first-time home buyers here in the Austin area. But let's start with some stats first. This upper box is the 5-county metro area. The bottom box is just the city limits of Austin. So if we're looking year over year, this is through April of 2023. Total sales are up about 13%, but pendings are down a little bit. And the reason is we had lower interest rates relatively. Coming out of 2023, we had mostly 7% rates. They went down below 7% for the first 3 months of this year. And that kind of spurred buyer activity, got more excitement in the market. But then when we got to April, rates went back up to 7 and then hit 7.5 not too long ago. They are just now starting to come back down, but that really hit the brakes on the market. So the more recent contracts, we're seeing that part slow down. But net new listings, we are up 28%, which equates to about 637 more listings than we had at this point last year. So where are we on price? We're really kind of flattening out and level with last year. Average sold price up about 1.8%. Median is like 0.5% below last year, but let's call it relatively flat. But what happened is rates went up, the price really started to flatten out. Days on market, it says here about down 10%. I'd say it's probably equal with last year if you net it out. Months of inventory, we're sitting around 4 months of inventory, which is really a fairly healthy market, normal market. If I look at City of Austin, again, total sales, we had a good Q1, more sales than last year, but pendings have slowed down. So we're seeing, again, current contracts are slowing down compared to last year. Net new listings, again, up a couple hundred homes compared to this time last year. Same on price. Average price is up about 3.6%, but the median is down 1%. And we really want to look at that median. That's just kind of telling us truly the middle house in the market is sitting about the same price as it did last year. These stats were put out by Bramlett Residential. Want to thank them again. They do some really nice charts. Here's the 5-county metro average median and sold price. And again, you can kind of see the normal bell curve. This starts with April through June. Then we go through December right here, and then it climbs again. So we usually peak out in kind of May, June. So the buyers right now, every year, typically are writing the peak contracts for the year. They will close in May and June. That's where the price kind of peaks out every year. You look here, you look here. These are the medians. And then last year, rates kept going up the second half of the year, and it really dropped price. And we went down. We had a negative year last year in terms of appreciation. We kind of bottom in the winter, and then it climbs again. But you can see we've had a nice spring bounce. Here's our low was in November of 420. We're back up to around 465 on median home price, and the average is around 600,000. But if I look at pending units, so this is, again, we were talking about pending. See how the first quarter, this bottom blue line was last year, 2023, and this year is the light green line. Well, that started hotter than last year, and it was getting closer to 2019 here. But as rates went up, it really leveled off, and now we're actually just a little bit below last year in terms of pendings. And that's what happens when you go over 7%. So to me, that number has really seemed to be a trigger. And I'll show you where we are on that interest rate here in a few minutes. But watch pendings right there. Here's affordability. I like this chart, and I'm glad they put it together. So what does affordability mean? Think of it this way. It's your mortgage payment. So in a nutshell, it's a combination of price, but also the interest rate. And so over here is what the mortgage payment would look like. And over here is where the interest rates are. So the mortgage is the dark line, and the average monthly payment is the lighter line. Okay. So the mortgage percent, wow, it really shot up last year when we hit 8% interest rates. Here's 8% interest rates. Okay. So that's the mortgage interest rate percentage. Here's the monthly payment, and it kind of mirrors it. So when rates came back down below 7% to kick off the year, look at the monthly payment. They came way down, almost $600 a month. And so that spurs a lot of buyer activity. We had a good first quarter, as I showed you in the numbers. But of course, we had rates jump back up to 7.5, and boom, there goes the mortgage payment back up to the above last year. And so what happens is that affordability, just the second that rate goes up, it like compounds the expense for the buyer and it makes it more unaffordable. And that's what slows down buyer activity. And so we really want to see that rate start to come back down. So let's take a look at it. So here's where we are in mortgage rates this morning. As of May 13th, we were up at 7.5 just a few weeks ago. We're now back down to about 7.1. Really watch the bond market this week. I expect this number to be real volatile because we have some important economic data coming out, including the CPI, Consumer Price Index. So watch that. That comes out on Wednesday. So if the news sounds like things are slowing down and the economy is slowing down and things aren't looking as good, ironically, that's probably going to help mortgage rates because bond investors will want to jump into the bond market and try to buy at the peak right now because they think rates will come down and they'll want to lock in a higher rate. So I know that's kind of confusing, but keep an eye on that. If everything sounds like, if you see the news articles and they're like, hey, hotter than expected, expect mortgage rates to stay higher. Here's a look at the chart. If I come all the way down to the bottom, this is 2024 right now. And again, this is 7%, this kind of line right down the middle. And you can see the beginning of the year, we were below 7, and then we kind of hugged 7 through March. Then it shot up to 7.5, and we stayed there for almost all of April. In fact, here's April 30th at 7.5. But since then, we've come down more than a quarter point. I'm hoping that can be a trend, and we can see that get back down to that 7 mark, maybe even below that 7 mark. I think that would spur some more buyer activity. So I know sellers would love that too, and get some more activity as we head into June. All right, let's talk about this article came out in Culture Map. 6 Austin area zip codes for first-time home buyers in spring 2024. I will caveat this, that Culture Map is kind of a fun entertainment website. And of course, they're going to focus very much on the Austin core, not as much the suburbs, because they want people to stay in the city. But anyways, let's talk about some of these zip codes. So 78744 is Southeast Austin, and I can tell you we've definitely had clients heading that direction. There's some good neighborhoods down there, including Easton Park, Goodnight Ranch. These are new construction neighborhoods. So we have a lot of young clients, I will agree, are heading into that Southeast Austin area. To stay in the city, it's more affordable, and you can get very recent new construction. 78757 is Central North Austin. So north of downtown, north of the University of Texas, but south of the Domain area, dead central. And yes, we've had clients buying in that zip code there too, but it's not cheap. You're probably looking at a decent house, 500 to 800,000, unless you're buying like a B unit backyard kind of property. But that's, kind of a starter price in that zip code area, but it's super popular and it would keep you in kind of a core part of the city. Windsor Park is northeast. It's near an area called Mueller. So Windsor Park has a lot of 1960s homes that have been remodeled, but it is a great area as well. And we're seeing a lot of young clients go there. Southwest Austin has always been a popular zip code area. The public schools tend to have good school ratings. And of course, you have a lot of greenbelt space. And depending on what part of Southwest Austin, you're only 10 or 20 minutes to downtown Austin. So it makes it very convenient. Pflugerville, of course, is a northeast suburb. And it's been popular too. It's also just not that far from the Domain, for example. So if you want to be, again, closer into the city, we're seeing Pflugerville. Median home price right there is about $385,000. And then Kyle's to the south. So as you go south out of Austin, you go through Buda, and then you get to Kyle. And we've got some listings down there right now. So Kyle is booming. It's one of the fastest 3 growing cities in our metro, along with Georgetown and Leander. And so anyways, Kyle's booming. And again, lots of new construction. So right now, if you are a buyer, what I can tell you is with rates being above 7%, pay really close attention to new construction. We have a client that went under contract this weekend, got probably more incentives as closing cost credits than I've seen from a builder in over a year, and is able to right now hoping to lock in his interest rate in the 4% range, using those credits to buy down the rate. So that's incredible. So if you're looking in some of these outer suburbs like Pflugerville or Kyle, there's a lot of new construction. If you are a primary home buyer, you'll be able to maximize, I think, incentives from a builder. If you're a seller right now, there is a little bit of good news. I mean, we're hoping that rates can come down, but I can tell you inventory is going up. We're kind of already where we should be in terms of peak buyer activity, and it's not as strong, I think, as we had. Well, definitely not since the pandemic, but it's at best equal with last year, which was okay. And so it's not terrible. It's okay. But I predict with 4 months average inventory, that means that the average home is going to take about 4 months to sell. Our goal is to beat that, but it could take a few months. And of course, if you're a landlord as well, we're seeing the same thing. So we have a lot of inventory and supply on the rental market as well. And so we're seeing it take a little longer to get tenants. We were actually getting tenants pretty quickly in the first quarter, ironically, which is normally a slower rent season. But I think because of the supply, we're seeing things take a little longer. So I would say this is going to be a year of patience. But if you're a buyer right now, hey, you got to decide, do you want rates or inventory? If you're happy with more inventory, this is the time to shop. We have more inventory on the market than we've had in 15 years, but the rate is going to be a little higher. If you are a seller right now, it's always still a good time to sell. We're still in the peak market. We're in May, we're in June. This is when we still typically have a lot of buyer activity. And possibly if rates, and this is not a prediction, it's just a hope, but if rates can get back down to that 7% mark or even drop a little bit below it, I wouldn't be surprised if we get a little more push into midsummer than we typically have. So keep an eye on that. Anyways, you can follow these videos each and every week on our YouTube channel at Ryan Kelly Group. Make sure to click that subscribe button. We're getting very close to 100 subscribers. So would love to have you join us there. And of course, if you know somebody looking to buy, sell, or invest in the Austin area, of course, we'd love the opportunity to visit with them. Until then, hey, my kids only have 9 days of school left, and then they are out for summer. So we're getting close to families being out and about. Until then, hope you guys have a great week, and we'll talk to you next Monday. Thanks.